Hi, everybody, and welcome back to Whoote, where you come to be informed, be amused, but never be misled. Today's show is number 4, actually. I didn't think there'd be another one, but it's number 4 about the Reddit Rebels. But unfortunately, this one's going to be a little bit different because the Reddit Rebels are claiming the surge. They're claiming credit for the surge in marijuana companies and pot stocks and cannabis stocks. And I'm sorry, guys, but you had nothing to do with it. I'm sure that you guys are very good at picking your stuff, but too big of a market. You cannot move it. Even Warren Buffett couldn't move it. So I'm sorry, but you can't claim credit for it. In any event, I'm right here and ooh, boy, does it smell good back there. Elon Musk was supposed to come today, and look what he missed out on. Some freshly picked, you know what, back there. But it's all legal here, and it's going to be legal nationally. And that's why we've been talking about pot stocks as being one of the emerging places. Now, we're going to talk about that today a little bit. We're going to talk about precious metals and what's going wrong with them today a little bit. But we have some new interesting things that are starting to look attractive. So with all that, we're going to come back to the charts in just a minute and tell you what's going on. Hi everybody, welcome back. Now first I want to announce that we are very capitalistic here at Markonomics 101 and Whoote, the place where you be informed, be amused, but never be misled. And what we want to do is thank you all for joining in. Thank you all for listening in. And we're going to have a giveaway. Any subscribers in existence by February 29th or February 28th, I guess. Or is it? Yeah, the 28th. I don't know my calendar. But anyway, at the end of February, we're going to give away $200 in smackaroonies, and these are going to be really worth $200 for anyone that is a subscriber. So please like and subscribe. It's right there, where you can see it. And maybe a little bit of this might persuade you to do it, but then certainly another kind of green might. So let's go to the charts and really talk about what's going on in the marketplace, because it's not just cannabis stocks, and to be honest, they've kind of run a little too far right now. So here we go. We're going to start with the Dow. All right, so let's go to the charts and let's see what's going on in this world. Let's see what those pictures can tell us that you're not going to hear on the news and the financial media, which I don't even want to name on the financial media, but all I know is they don't exactly tell it like it is. Remember Howard Cosell? He said, tell it like it is. All right, so we're going to go to the Dow Jones Industrial Average, and what we have here is a false break of trend. Oops, I went a little too fast here. We have a false break of trend. Now, we also have a very narrow trend channel. I call this a bear pennant for a reason. There's very little energy when you have a tightly wound, slightly advancing type of trend channel. What happens is you have very small days, small days, small days. It's just a lot of churning around. So it doesn't tend to be a very bullish pattern. And here's another reason why it's not. Okay, this is a Dow Jones with 2-hour intervals, and what you can see is that even though it's just perceptibly above its little trend channel there, it's gonna only take about a 5% drop to wipe out several weeks of people buying it in several months even. See, that's a thing that is so treacherous about when the market just kind of chugs up at a slow rate, kind of like the train that said, I think I can, I think I can. Well, yeah, it could, all right, but it went right off the cliff. And that's what happens here. You keep going, you keep going, you keep going, all of a sudden the thing just breaks. Everybody's complacent, they're happy, they're not concerned, they're bullish, and all of a sudden the thing just breaks out of nowhere because there are no buyers left. Everybody's all in. And that's the important thing. Right now, most people are all in. The stock market is all the rage. Bitcoin is all the rage. The Reddit rebels are all the rage. But you know what? You don't make money buying when all these other people are buying money. You make money by buying when they're selling and they're emotional and they're panicked. You sell to them when they are all greedy and proud of themselves and complacent. And I don't mean just Reddit rebels. I mean any investor. I mean, even me, I get that way. I get greedy. I get fearful. That happens. It happens because it is human nature for it to happen to anybody. So I'm not criticizing a damn person out there, except to tell you and to reemphasize that buy low, sell high means that you buy when people are selling and panicked, and you sell when people are greedy and they just think they're you know what doesn't you know what. Ace does not think that because believe me, his you know what. Oh my God. Okay. And you know, those silent ones that he does. Jesus. Anyway, so we're going to go on to the NASDAQ 100. A little bit of a slightly more steep advance, but it did start to break at the end of the day. NASDAQ 100 has been consistently the strongest index, and for the last couple days, it has been very weak. Why has it been very weak? Not because these companies aren't doing well, but because everybody's in. There's no one to buy from you. You know, you have to sell to somebody at a higher price. And I mean, when you're trading at 30, 40, 50 times earnings, who the hell's going to do that other than somebody that is dumber than you or dumber than me? Because I sure as hell have done it a bunch of times. All right, now, the next one. Now, this is NASDAQ 2-hour intervals. Again, this is to show that when the rate of ascent is not very high, that it doesn't take a big break, you know, a big downdraft, in this case about 8%, and you've wiped out 4 months of trading right there. And that can happen in 2 days, if not one. So, you know, it might take 4 months to get to a spot and 2 days to completely wipe it out. And if you're like me, you're sitting there like a deer in headlights going, oh my God. What we're going to try to, you know, do here is ways to keep your emotions under control and to be very disciplined and stick to when those times are to admit you're wrong and get the hell out. All right. Standard & Poor's, same thing, false break trend. And, you know, again, it has, you can see at the very, very edge of the graph, you know, a little bit of a break. And I'm going to tell you, this is another one that's, you know, that's really at risk. Here's that 2-hour trend channel. Notice that break at on the very right. Okay, now that could be the beginning of an accelerating downside. A lot of tops look like this. I'm not necessarily yet 100% sure of a top or predicting a top or claiming I know it's going to be the top. But what I'm telling you is this is the right setup. Everyone's in. Bulls to bears, the number of people that are excited about the market is something like 4 to 1, according to your Denny research, which keeps track of bulls to bears and all that kind of stuff. You know, basically everybody's bullish. Why aren't you buying? Why aren't you getting rich overnight? Why aren't you? Because you don't. That's why. This is Standard & Poor's small cap. Okay, now the small caps actually broke out. I had an island right there, you know, drawn. They broke out a little bit above, but again, these are likely to be the kind of companies that become more aggressive. They rally more at the end because they're cheaper, and you're getting a lot of, you know, retail small money coming in that isn't very educated, and these are buying these kinds of things. Penny stocks are all the rage out there right now, and they're losers most of the time. So, you know, when you got people just throwing all caution to the wind and hoping, and hope is such a terrible ally, that when you have people hoping that something's good's gonna happen, might as well kiss it off right there. Because I'll tell you, every time I hope for something, I just sure as hell have never gotten it. Not from the market anyway. Dow Jones Transportation still looking bad to me. You know, it's kind of bounced off of its trend line, but it's still, you're going to see some of the components here, and there are definitely signs of the economy weakening here in various areas. We're going to show you that right now and what that means for what to buy. All right. Oh my goodness. So here we go. Let's see. Oh, there's Dow Jones. Okay. U.S. dollar index. Also, it was breaking up. Now it's kind of breaking down. So, gold and precious metals, though, they don't look good. Everything else that's, sort of dollar denominated or dollar sensitive, like Bitcoin has been going through the roof, but that's another one. People just buy it because it goes up. They don't buy it because they know what they're buying. So, right now, we should be seeing precious metals go up. Long term, yes. Short term, no. We're going to still stay to the sidelines because I'm not quite sure what's going on with precious metals right now. And with the those rebels, making it go up and down and up and down. I don't really want to get involved because, to be honest with you, that's not the smartest money in the world. I mean, it really isn't. These are retail investors, and they almost never make money. Hedge funds have enough trouble making money. Professional investors like me barely ever make money. So the rebels, guys, be careful. Yields are going up. Here's another reason why we think that the market is probably pretty close to the top, is the 10-year yields on treasuries. We've been saying this for the longest time. It is going to break out and it is going to run up and it is going to absolutely wreak havoc with the system. Right now, all the banks, all the banks are so thankful for this because now they can borrow at 0 and lend at 1.25. Oh my God. But you know what? What's going to happen is they have assets that are also interest rate sensitive. So are their liabilities. It's not really going to help them that much. And any asset that you have, once interest rates go up, it's worth less. But all things being equal, it has to be. It has to be worth less. The 30-year Treasury yield, same thing. The Fed has less control over these things, and I don't know. These things start to get up to 3-4%, and we're going to see some effects on the economy. One of the things we're going to see is more people saving. That's a good thing in general to have people saving because you want to have people saving. You don't want to have them dependent on Social Security. Or wait a minute, do you if you're the federal government? I guess you do. Well, I don't anyway. I mean, most of us want to be independent, but the federal government would like to take care of us. And God, I'm just so, I want to cry, because they're so beneficent and they're so, all they think about is us, the people. So, Apple is right along its trend line. And, again, I said this last time, if you missed last show, 2.4 trillion in market cap. It is bigger than the GDP of the top 7 countries. The top 7, there's only 195 total. So 188 countries have GDP less than Apple's market cap. Amazon too, except it's more like more like number 10. But this one's actually behaved pretty well. Jeff Bezos just quit. I don't understand why that didn't affect it, but it didn't. Amazon had an earnings report that was pretty good, and so it is held up in a very bullish pattern. And this one is one of the reasons why it's going to take, turning the market over is probably going to be more like the Titanic than it's going to be just a sudden break. But once it does break, it's going to take everything with it. Facebook, I just want to make it clear that Facebook does not have a monopoly in fact checkers. So do we, as a matter of fact. And I've been checking a lot. Ace, who is my key fact checker, he's sitting right there. He's so tired. He's just like, because of the fact checking that he does. But I'm going to tell you this right now. I have not found a single fact of a fact checker that is absolutely correct, because we check the fact checkers and they're full of what. So I don't know. So I tried to call customer service the other day and ask about the fact checkers. The main line at corporate headquarters for Facebook. Except the problem is there isn't any. Facebook apparently has no people working for it because no one can answer a phone, or they have no phones, or they can't afford phones. I'm not sure which it is. But maybe one of the requirements of getting a job there is that you don't know how to answer a phone. I've never thought about that. I always thought that was a good skill, but maybe not in this case. So Google still looks like an incredible chart. I mean, I wouldn't buy it here because it's so damn high. But on the other hand, it looks really good. I mean, if this thing weren't trading like 30 times earnings or 20 times earnings, I don't know what those are. So please don't quote me on those. I would tell you if I knew the exact same number, the exact number. The problem is with a lot of these companies is that their financials are fiction. In other words, you create categories like fudge factors payable or unknown receivable or that kind of thing. I mean, and then you get all these write-offs, one-time charge, for performance of the division or something like that. So there's a continual way to hide losses, magnify gains. And so, while I'm not accusing Google of doing this, I'm accusing of the entire New York Stock Exchange of doing this and the NASDAQ of doing this. Not just Google. They may not do it that much at all, but I can tell you what, my buddy Elon, he sure knows how to cook those books. I mean, cook, I don't exactly know because they do have to be audited. It's a public company. But my God, when you have 3 CFOs leave in a short period of time, kind of makes you think about something. So, Grubhub, the reason I put this in here is that there is a growing industry in what I would call transporting minimal items from point A to point B, 5 miles or so. And you've got Uber, you've got Lyft, you've got Postmates, Instacart, DoorDash, Grubhub, and all they have, okay, is access to a GPS software like a taxi cab distribution company would have. That a taxi cab would have a guy that distributes a taxi somewhere. So I mean, I don't know why that's so valuable. They don't cook, they don't drive, they don't own assets. I really don't get it. But Grubhub looks like it's kind of grubby here. So, this is a very good sign that these kinds of companies are just not really, they're very competitive, and I don't think they're going to continue to have premium values. The airline index is an amazing thing here. Okay, now, airlines are half full. People do not want to fly. The airlines have shut down most of their route system, so there aren't even as many flights. So how is it that this thing broke out? It's now buy. I mean, if you look at just the chart, it's a buy. So would I prefer to follow the chart? Would I prefer to follow what's going on in the airline business? Well, to be honest with you, this is where the charts are always right. And I'm going to show you a particularly egregious example of market lunacy here, okay? Now remember, the market can stay irrational longer than you can stay solvent. So if you are investing based on pure logic and fundamentals and all that, well, bravo to you for the thought, but ain't going to work. I can tell you that. The market could care less about fundamentals. So in this case, American Airlines, I got to tell you, they were given a $100 million bailout, $100 billion bailout about a month ago. And I know that's not a lot of money. I mean, I kind of carry that in loose change pretty much all the time anyway. I mean, who can get a candy bar for less than a couple trillion? So the thing is, they squandered $100 billion in a month. They're already going for another bailout. But look at where it's trading. It's trading at $37. So I guess that investors must expect an oncoming stream of bailouts. I don't know how else to explain it, but if you're going to trade this thing, you're going to trade it to buy. I just go like that, close your eyes, hold your nose, go, but don't buy it. The reason I would not buy this is because I like to have fundamentals and the charts in my same direction. Okay, the Dow Jones REIT index. Okay, now it's time for some fun stuff. Real estate is the new place where we are seeing buy opportunities. This is the REIT index. It's broken out. There's a whole bunch of companies that are basically mall owners. They're like public storage. They're companies like that are essentially landlords, but they're not landlords to normal people like me who the federal government in its infinite wisdom has given me the right, should I be a renter, not to pay. I'm not. I have to pay. and number two, I still have to pay my bills. But in this case, you are actually seeing some pretty successful mall owners that are opening back up. And if inflation starts coming around, these rents will go up, and you'll have a nice little growing income stream. It won't be high because rates are so low, but they do yield. A couple percent interest, and it's usually tax advantage. So it's not a bad group to get involved with. Here's one that I particularly thought was kind of neat: equity residential properties. And I just want to show you that an example of one of the ones that is now starting to emerge. We're going to have on the next show. We're going to go through all of the real estate companies, and there are some winners in there. Trust me. FedEx Corporation, once again, this transports goods, and it's just not looking too good. This is why I think the economy is not really what it's cracked up to be right now. It just kind of like it's a shiny metal object that really isn't all that shiny. Ford Motor. I don't get this one either. Ever since the Biden administration took over, they started telling every motor company that they're going to go all electric and that they're going to buy only electric cars from them. So I guess here's what we've got. We've got Ford Motor is a sexy growth company now making high-tech cars. And so, that insult that you have, maybe you can kind of trade it in for a new Buick LeSabre, or something like that. General Motors too. This is another one going parabolic. I don't get it. I don't get it when companies like General Motors go parabolic that are so freaking stodgy, so old, unionized. They reject all kinds of innovation. But you know what? The government bails them out. They listen. They're going electric too, and that's why you see this parabolic increase. This is big national oil companies, is like Exxon, Chevron, etc. Kind of chugging along here. It's not doing too good. Even though the prices of oil are going up, they're not making money. So it's just not that good. Oil services or drillers, again, they're kind of looking okay, constructive pattern, but unless the economy starts demanding more oil, and it's not, at least not yet, be careful about stuff like these. But this one looks okay. This is crude oil, West Texas Intermediate, which is a benchmark. It's a Texas oil, and look at that, just keeps going, just charging higher. I absolutely believe that this is going to filter through in inflation anytime now. Maybe a month, maybe two, maybe three, maybe four. But you're going to start seeing this because you don't see a move from $10 all the way up to practically 60, in about 9 months without that affecting things. American Express, well, kind of looks like a rounded top. I thought it had broken down, but if it goes above 125 or 130, we're going to call it bullish. We're just going to say, okay, financials are going up. And if it breaks down below that support line that you see at 112, then we're going to say, okay, now it's time to go short financials again. MasterCard, kind of just floundering around. It looked like it was going to break down, but MasterCard and the credit card companies are very, very important indicators of how much retail activity there is. Retail is 70% of GDP. All right, okay. General Electric is a combination of a financial company and an industrial company. General Electric has been around forever. It was one of the first Dow components, one of the first Dow theory, or the Dow 30. It stayed a Dow 30 component until a few years ago when it sort of fell off the wagon. It looks like management apparently had bought too much stock in at high prices, at obscene prices, taken on too much debt, and it didn't really do all that well in the 1908. The 2008, 2009, financial crisis. It didn't do too well, but it's starting to come back, but it does make a rounded top. So keep an eye on this one because it is both an industrial and a financial. So this one is a really important company to keep an eye on. The biotechnology index just continues to chug up higher. Now, I understand, and this is something, again, there are reports. I have no idea what the actual number is, or I tell you, But there are so many vaccines and so many small biotechs that you and I have never heard of that are developing vaccines. And, they're being encouraged for it. They're not just doing it for the hell of it. They're not competing against Pfizer and Merck for the hell of it. They're doing it because there's something in it for them. So the question I continue to have is, with all these vaccines, which one are you supposed to take? And who's liable if you take the wrong one? It's just a question. But I mean, if my doctor says, if he says, look, take this one called cyanide, what if I listen to him and I die? Okay, which I might have from cyanide. But cyanide will kill, by the way, coronavirus, because it does kill the body. So that one is 100% effective, and I might just get that one. Who knows? But anyway, the biotechnology index continues to be like hope. It's another place of hope, 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 hope. All right. Broker dealer index. These guys are really happy. They have a slew of offerings coming out, but I don't know. SpaceX being the largest one, and I'm still dying to see how Elon is going to get all those people to Mars and back safely in 4 years. I really want to see that. He says he can. I don't know. Big Pharma, oh, they're always happy, but Big Pharma's not doing as good recently now. I think they're trading at some pretty high values. So possibly big ascending wedge. Core Mining, one of our precious metals companies. I don't even know what to say here. This chart is so like fracata from the Reddit rebels, having things go all over the place. So same with the amount of gold, except the amount of gold is broken a trend line. So I'm not too keen on precious metals right now. I am long-term keen on precious metals, but not now. Now's not time to enter. Wheat and precious metals, here you go. This is a weekly chart, head and shoulders, looks like crap. There's another reason precious metals are not now. All right. And finally, we're going to go to my favorite and Elon's favorite, and I wish he hadn't gone, but Aurora Cannabis. And this is going to be an illustration of take your money off the table. Now, I will be the first to admit, since I've been recommending these stocks, I've actually sold really early, and almost embarrassingly early. But you know what? I made a profit. I'm grateful. Thank you, God. Profit, 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 even if it's small. It's better than a big loss. And I will tell you one thing. When you look at like the graph here of Aurora Canvas, the chart, look at what I put 1, 2, and 3. Okay? These kinds of companies get speculative frenzy from people like Reddit rebels, but I don't know if they've really moved it enough, or at all or much. But I'll tell you this, they are subject to sudden reversals, and you could be feeling rich as hell one day and poor as hell the next. So be careful that you get a good setup before you enter these things. Long term, these are great. Short term, just be patient. Canopy Growth, the largest. Look at that. Oh my God, I sold this thing. I sold it at 34 or something like that. Yeah, look, I got a nice profit. I'm not complaining. But the thing is, you never know the top. And what happens is you get these drawdowns. I've drawn them on here. 45%, 48%, and 50%. And chances are those people that have seen those drawdowns bought at the top. That's what happens. People buy at the top, they suffer a huge drawdown, and then all of a sudden the air's out of the balloon. Tilray. Okay, now the reason this one it's so scrunched here is because I haven't changed the chart. And this is how far it's gone up. Yes, it is trading at 63.91 on the close today. And this is a company, I sold it like 21.22. Take your money off the table before the table takes your money off of you. Oh, I don't know. I'm going to pay my phone bill now, or Ace's dog food. He's so pissed at me. I haven't even told him yet. But in any event, this is a good long-term hold. Don't chase this. Okay, see how it's going straight up? It's begging you to buy it. And just like other companies, Tilray and all of these stocks have a tendency to reverse on a dime and to make you poor before you even know it. It looks really good. Come on, buy me. But you know what? That's what Mr. Market does. he holds out the carrot, snatches it away from you. So anyway, with that, we're done for today. Please subscribe. Please like us. We're having that giveaway. It's going to be $200 to any subscriber before the end of the month of February and every month thereafter. Not to mention that, you get the information here that is always be informed, be amused, but you will never be misled. And we will see you next time on Saturday. We're going to talk real estate.